1. The market in turmoil, the new normal? Global markets continue to navigate turbulent waters. The S&P 500 is once again near its 200-day moving average, while the SOX Semiconductor Index has traded below this threshold for the first time in years. Retail investor sentiment is at historic lows, according to JP Morgan data, while CNN's greed fear indicator signals extreme fear. Key data. 1. NY FANG Index testing the 200-day moving average. 2. The SOX Index is significantly down from early year highs. 3. Retail sentiment at historic lows. Source JP Morgan. 2. Global financial flows. Gold rises crypto. In crisis, according to BofA's report, capital flows are undergoing a significant transformation. Gold has seen a record inflow of $9.9 billion over the past 4 weeks, while the cryptocurrency sector has witnessed a $3.6 billion outflow, the worst in years. Main weekly movements. 1. $53.1 billion into cash. 2. $22.9 billion into stocks. 3. $12 billion into bonds. 4. $1 billion into gold. 5. $2.1 billion outflows from cryptocurrencies. BofA's bull and bear indicator remains steady at 5.4, signaling a balance between risk appetite and caution. 3. Energy and commodities, the tariff storm and recession. Risk new tariffs imposed by the Trump administration on steel and aluminum are hitting the metals market, while OPEC's Plus decision to release 2.2 million barrels per day starting in April 2025 has pushed Brent crude prices below $70 per barrel, the lowest level since December 2021. Key data. 1. Brent, minus 3.8% weekly, minus 5.6% annually. 2. WTI, minus 3.4% weekly, minus 5.8% annually. 3. European natural gas, TTF, minus 14.4% annually. 4. Gold price above $2,900 odds according to MUFG. The oil market will be oversupplied in 2025 with an estimated surplus of 0.9 million barrels per day, keeping downward pressure on prices. 4. Credit market. Opportunities and risks in high-yield bonds. Howard Marks of Oaktree Capital warns that current bond market yields have fallen to 7% from the 9.5% highs of 2022. The compression of credit spreads to 290 BPs is one of the lowest ever recorded since 1977, signaling increased risk for bond investors. Key historical data. 1. Average high-yield default rate, 1986 to 2024, 3.5%. 2. Average high yield versus Treasury return, 7.83% versus 5.14%. 3. Current high yield spread, 290 BPs. Historic low marks advises investors to carefully assess whether current default risk justifies compressed spreads and to consider balancing with instruments less exposed to credit risk. 5. Strategies for a resilient portfolio. The Bridgewater approach. Bob Prince of Bridgewater emphasizes the importance of diversification in an era of economic change. The exceptional stock market performance of the past 15 years may not be sustainable, making a diversified allocation strategy crucial. Key points for portfolio resilience. 1. Reducing stock concentration. 2. Increasing diversification with uncorrelated assets. 3. Exposure to precious metals and inflation-linked bonds. With growing geopolitical tensions and uncertainty over economic policies, Bridgewater suggests preparing for a broader range of economic scenarios to avoid excessive exposure to a single market trend.